Hello again and welcome back to Fast CPAs and Consultants. As always, here we are with our CPA Fulton, Abraham Sanchez. Hi Fulton, welcome back.
Thank you, Monica. How are you doing?
I am fine, thank you very much. So for the ones who are new in our channel, this is a video series called Tax Talk, where we are going to talk about the different tax strategies that you must follow according to your situation, and we will answer the questions received through our social networks, which you will find as well in the description of this video. So today we are going to talk about the famous Fatca. On the last video, we talked about the F-bar, and evidently we had to mention Fatca, and since we received many questions related to this one, we decided to make our third video about it. And due to the number of received questions, we have divided this video into two parts. So Fulton, are we ready to get to know better the Fatca?
Yes.
Okay, so here we go. First question we received, and like the most obvious, but the most important as well. What is Fatca?
Okay. Fatca is a law. And you see that Fatca, the name Fatca has two A's. F-A-T-C-A. The first A is for assets. The last A is for act or law. So Fatca is about foreign assets. As well as F, foreign assets. The T is about tax. So you have assets, you have tax, and the C is about compliance. So it's foreign asset, tax, compliance act. This is about the compliance of that you have to follow, or you have to do for the reporting of foreign assets. Is Foreign Assets Tax Compliance Act. So this is a law that is created to obligate to US citizens and US residents to comply with the reporting of foreign assets. This is in general. This is not bank accounts only. This is all foreign assets that you have in a country outside of the US. This is real estate, this is stocks, this is insurance, this is gold, this is a security box in a bank, this is titles of a company, this is real estate, all assets that you have in a foreign state, in a foreign country. That's a Fatca.
All right. And who is required to report under Fatca?
Every single citizen and US resident. There's no excuse.
Wow. So everybody should be aware of it. Every single citizen.
The only thing is that there is a difference between US citizens living in the US and US citizens not living in the US. US citizens in the US, they have a threshold, meaning a limit, a minimum to report to the, in this case, report to the IRS. Fatca is with the IRS, F-bar is with the US Treasury. So Fatca is with the IRS. And if you live in the US, you are a US citizen as US resident, and you live in the US, and you hold $50,000 of any kind of assets outside of the US, you have to report under Fatca. If you are a US citizen living in the US, US citizens or resident living in the US, minimum amount to report is $50,000. $50,000 and above, you have to report. If you are a US expat, the amount to report is $200,000. So $200,000, if you are a US expat, you have to report to the IRS. If you are married and you are reporting married filing jointly with your spouse, and you are US resident, the amount doubles, increases to $100,000 if you live in the US. If you live outside of the US, same thing, the amount increases 2 times. Now it will be $400,000. So 50 if you live in the US, 200 if you live outside of the US. If you are single, double the amount if you are married filing jointly.
Understood. And what is Fatca used for?
Fatca is used for the reporting on all assets, either financial assets, real estate assets, financial assets, for example, stocks and titles that you hold in a company, benefit that you have in a foreign trust, all those assets need to be reported to the IRS. So it starts with bank accounts over 50,000 if you are a US citizen, or over $200,000 if you are expat. Same thing, the same limits apply for the rest of assets. Real estate, ownership of a company, stock holdings in a company, security boxes in banks, gold that you're holding, any kind of insurance policy that you have, the cash value of the insurance policy. If you have funds in a foreign fund in a foreign country, if you have investments in a foreign government who is not in the U.S. Wall Street market, in the stock market in the U.S., and the government is, for example, in Cayman Island stock market, or in Bermuda stock market, and they have their holdings there, or in any Asian market, and the government is holding their bonds there, listing their bonds there, not in the U.S., you have to report those assets as well.
Okay, I see that. Here we have another question, but I think you have already answered. Like, to summarize, who is affected by Fatca? Everybody.
Everyone, every single U.S. citizen and U.S. resident. There is no excuse.
All right, and well, this question is Fatca only for U.S. citizens, or
yes,
also residents?
No, it's for U.S. citizens and U.S. residents living in the U.S. or not living in the U.S. If you hold, for example, a visa, H-1 visa, which is a working visa, or any other kind of visa that is an immigration visa or non-immigration visa, you are not subject to Fatca, even if you live in the USA.
Okay. Even if you're allowed to live and to work, yes, but holding a visa holder is exempted.
Correct.
Okay, I see, understood. What is Fatca reporting?
Fatca reporting is the use of a form that the IRS has created that you need to detail or provide the details of every single asset that you have outside of the US. This involves where the asset is located, if it is a holding in a certain bank, what is the amount of the asset, what is the fair market value of the asset, what is the cost of the asset, what is the interest rate of the asset, and how long have you been holding the asset. It's a detailed account of every single asset that you have. This is not only bank, remember, this is not only bank holdings. Bank holdings for FBAR is $10,000 start. That is with the U.S. Treasury. The IRS doesn't have anything to do with that. This is whenever there is an involvement of the IRS with Fatca, this is directly related to the taxation and to the considering and registering the reporting of all the assets that U.S. citizens hold outside of the U.S. to make sure that they are paying their taxes, dues, to the IRS.
Okay, that's clear. Thank you. And how do you become Fatca compliant?
Fatca compliant is something that foreign banks have implemented. This is not, U.S. citizens do not need to worry about Fatca compliance, because Fatca compliance is in a specific form created by foreign banks that are given to citizens in their countries and to attest and or to say that they are not or they are US citizens. It's like when I go to the bank and the manager of the bank, the president, the person who is helping me with opening the account, the person suspects, okay, not even suspect, the person is obligated to ask me if I am US citizen or US resident, or if I have any affiliation in the US in terms of immigration. Obviously, under perjury, I have to say yes, because I am a US citizen, so I have to say yes. If I am a US resident, I have to say yes. When I respond positively to that country, they are obligated to give me a form, a specific form that I have to prove and give my information, give my social security number and my information in that form. With that form, the bank becomes compliant. And because I am giving my information, I am also becoming compliant with the bank, not with the IRS. The only way the bank becomes compliant with the IRS, because the bank has given me the form and I have provided my information to the bank. Therefore, the bank is compliant with the IRS because that information is going to be given to the IRS in their monthly reporting from the bank. That is a bank becoming compliant. How I become compliant as a US citizen or US resident when holding assets in a foreign country over $50,000, a property, a bank account, a stock market account, anything that is in that foreign country that is over $50,000, and I live in the US, I have to report. Anything over $200,000 and I am in a foreign country, I have to report. This is every single of my assets, every single asset I own. If I am, again, this is not only bank accounts over $50,000, if I am a US citizen living in the US, or $200,000 if I am living outside of the US, it's not only the bank accounts, it is also the stocks that I have in a foreign country, the owners of companies, of foreign companies in that foreign country. If I am a beneficiary of a trust, excuse me, in the foreign country, I also have to report that. If I own gold, if I have a security box and I have belongings there that are valuable, I have to report that to the IRS. That's how I become compliant with the IRS for Fatca. There are two sides of the compliant, for the bank and for the US citizen.
That's clear. Thank you, Fulton. Well, we are running out of time, but don't worry, we will answer more questions about Fatca in the second part. Thank you for joining us, and of course, thanks to our CPA Fulton for sharing his knowledge. And remember, everybody, to subscribe to our channel so you can be notified when we publish a new video about taxes, and of course, when we publish the second part of Fatca. Thank you, and see you in the next video. Bye-bye.
Thank you.